Improving inflation optimism fades as the tariff trade war escalates. So we finally got some good news. Both the CPI and the PPIs in February inflation data came in better than expected. We got a look into producer pricing today, basically what companies are paying for the cost of goods and services. The core PPI in February slowed to 0.2%. This decelerated from last month's 0.3% and expectations to maintain that pace. Meanwhile, on the consumer front yesterday, aka prices we pay, the core CPI in February grew 0.2% month over month. This growth was considerably slower than the 0.4% last month and below forecasts for 0.3%. So inflation is still higher than the Fed's target, but January's inflation spike now feels more just like an outlier. However, we do caution that the data is unlikely factoring in all the tariffs that went into effect this month and in the future. And on that note, while markets tried to rally a bit yesterday on the good news, tariffs once again dominates headlines. Despite the good PPI data today, shares tumbled as the tariff trade war escalates now between the US and EU. The S&P 500 has now joined the Nasdaq in a correction. So only the US's broad steel and aluminum global tariffs are in effect so far for the EU, with vague reciprocal EU tariffs still just promised for next month. However, the EU is already retaliating with 50% tariffs on American whiskey, along with tariffs on beef, poultry, motorcycles, peanut butter, and jeans. The White House escalated the trade war to further today, threatening 200% tariffs on wine in return. Markets were already rattled from the trade war with Canada and Mexico. Starting another fight with the EU only makes things worse. So the White House and EU are scheduled to have a call tomorrow. Optimistic investors might be hopeful for some de-escalation, and we wouldn't be surprised to see some retractions tomorrow afterwards. However, we're not seeing any softening in the White House's approach towards tariffs, and therefore don't see the macro stabilizing near term. In addition, the better inflation readings may just be a mirage with all the tariff impacts still unaccounted for. We definitely feel the US is tipping more and more towards a recession. Unfortunately, a market correction may just be the beginning.